will be discussing about file structure for the expenditure cycle, which is inventory file, purchase order file, PO line item file, receiving report file, check register file, disbursement voucher file, supplier file. So let me discuss about inventory file. So inventory file contains quantity, price, supplier, and warehouse location data for each item of product inventory. The purchasing process begins with a review of these inventory records to identify inventory items that need to be ordered. In a retail organization, these steps is performed when sales of finished goods to customers are recorded in the inventory records. So in this situation, the purchasing process includes recharging the complete goods inventory. Purchasing system of manufacturing firms renew crude material stock as these things are utilized in the production process. In other case, when stock things are sold or utilized underway, the quantity on hand filled is decreased as they be by a PC application. With each decrease, the framework tests for a order condition, which happens when the amount closed by falls underneath the reorder point. Around then, the framework reads a buy request, which is shape of the seller, and adds a record to purchase order document. The amount available worth will stay underneath the order point until the stock is gotten from the provider. This cycle may take days or even weeks. To mean that the things is on hand to keep it from being reordered each time to PC application distinguishes a similar reorder condition. A PC created by a request number is put into the PO field of the stock record. Next, purchase order file. These files contain records of purchase placed with suppliers. The record remains open until the inventory arrives. Placing the receiving report's number in the dedicated file closes the record. So, I know naman na gets na siya kasi self-explanatory naman siya, diba? So, let's move to the other one. Purchase order line item file. The line item file contains a record of every item ordered. Since a single transaction can involve one or more products, each record in the purchase order file is associated with one or more records in this file. Notice that the file contains a composite primary key, purchase order number, and item number. Both of these characteristics are expected to uniquely characterize each record in the document. They additionally give connects to related strings in the purchase order and inventory records. In receiving report file, at the point when the items arrive from the supplier, they are checked and examined, and receiving documents are prepared through terminal. The receiving clerks enter data about the items received, so the system automatically performs the following task. First, increase the quantity on hand filled in the inventory records. Second, removes the reorder condition by resetting the PO number field to its normal blank state. Third, creates a receiving report record of the event. And last, closes the purchase order record by placing the receiving report number in the designated field. So next, disbursement voucher file and register file. For most companies, discrepancies between amount ordered, received, and billed are legitimate concern that must be resolved before payment to the vendor is approved. Because of its complexity, this reconciliation is often a manual process that is triggered by receipt of the supplier's invoice. The accounts payable clerk audits the supporting records in the purchase order and receiving report documents, and analyze them to the receipt. In the event that the things amounts and costs coordinate at the point a record is added to the disbursement voucher file. Disbursement voucher file based on the supplier's term of the trade and the company's payment policy. The payment due date is determined and placed in the disbursement voucher record. Every payment day, the cash disbursement application chooses the things because to be paid and adds a record to the check register file for every installment. It signals the things paid in the individual dispensing voucher records by entering the current date and the framework related check number into the proper fields. The system then cuts the checks that are mailed to the suppliers. The disbursement voucher file provides two important pieces of information for the auditor. One, it is a record of the timing and amount of vendor voices received. And second, at any point in time, the open items or unpaid vouchers in the file constitute the company's outstanding account payable balances. Next, file preparation procedures. The data contained in the preceding files provide evidence that may either corroborate or refute audit objectives. Most of the time in the following section involve using ACL to assess and extract data from these files. Review from the past part that each record should be characterized as far as its actual area and its structure through a progression of simple to go through pop menus. The auditor indicates the name of the record and where it dwells on the mainframe or PC. Next, ACL then prompts the auditor to define the file's structure in terms of the length of each field and the data type contained in each field. Numeric, character, or date. When the data definition is completed, it is saved under a unique name assigned by the auditor. All future file access is accomplished by simply selecting the data definition from an ACL menu. ACL automatically locates the file and presents it on screen, where the auditor can review and manipulate its contents. Their figure 10.8 shows a sample ACL data definition screen. Sometimes the contents of a data field are different from what they are supposed to be. For example, a numeric field in one or more records may contain alphabetic data because of a program error or a clerical mistake. Also, a field may contain corrupted data because of an error in the file flattening process. Whatever the cause, prior for the performing any substantive test on a new file, it is important that the auditor validate its contents. Invalid data will distort the test result and may cause a system failure. ACL's verify command and analyze the data fields in the selected file to ensure that their ACL contents are consistent with the field type in the file definition. Any validity errors detected by ACL need to be traced to their source and resolved. For purpose of this discussion, we will assume that the values in all tests described hereafter have been properly defined and verified. So maybe later, figure 10.9 shows the ACL verify command box. Testing the accuracy and completeness assertion. The audit procedures described in this section provide evidence relating to management assertion of accuracy and completeness. We saw in the last chapter that the auditors often precede substantive tests of details with an analytical review of accounts balances. Analytical procedure can identify relationship between accounts and risks that are not otherwise apparent. In the case of the expenditure cycle, an analytical review can provide the auditor with an overall perspective for trends in accounts payable and related expenses. Current expenses may be compared to historical expenses and management budgets. For instance, the auditor may think about current payroll expense for the quarter with those for a similar period in earlier years. Unordinary patterns or changes should be noted and analyzed for cause. On the one hand, analytical procedure may show patterns, even in enough controlled associations, that lead the auditor to extend substantive tests. Then again, they can give affirmation that transactions and records are sensibly expressed and complete, and may in this manner grant the auditor to lessen substantive testing. As in as I mentioned in file preparation, this is the sample ACL data definition screen. So that's the sample. So next, review disbursement voucher of unusual trends and exceptions. A useful audit procedure for identifying potential audit risks involves scanning files or unusual transaction and accounts balances. For example, scanning accounts payable for excessively large balances may indicate abnormal dependency on a particular supplier. However, a high number of vendors with small balances may indicate the need to consolidate business activity. Various corporate surveys have estimated the cost of processing a purchase order at between 50 and 125. Restricting the number of vendors with whom the organization does business can reduce these expenses. These figure 10.9 also mentioned in file preparation procedures. It shows in here the verified data. Next, the auditor can use ACL stratify and classify features to identify various characteristics and anomalies associated with accounts payable procedures. Both of these functions are used to group data into predetermined intervals, count the numbers of records that fall into each interval, and accumulate the financial value for each interval. The stratify function groups financial data into specific strata. Utilizing information like in Table 10.2, we exhibit its utilization for separating disbursement vouchers by aggregating the amount filled for every layer. The characterized work structures layers depend on non-financial and non-numeric information. In our example, this component is utilized to assemble the vouchers by vendor number. So that's the sample. To attach the last table in my report, which is figure 10.10, stratified disbursement voucher data. So get your copies na lang, guys. So ayan, we can notice that 91% of the total number of disbursement voucher constitute only 15% of the business volume for the period. The second report shows the business activity associated with individual vendors. Over 40% of the organization purchases are from a single vendor, while most of the other vendors receive only a small percentage of the total business. These findings may reflect a natural business phenomenon or they may signify potential risk. Excessive purchase from a single supplier may reflect an unusual business dependency that may prove harmful to the firm if the supplier raises prices or cannot deliver on schedule. This situation may also signify a fraudulent relationship involving kickbacks to purchasing agents or other management. The large number of small volume suppliers is evidence of a highly inefficient purchasing process. Management may consider reducing the number of suppliers and increasing the size of their order quantities to reduce the number of order placed. This situation may also be signal to the auditor that a valid vendor approach to purchasing is not in use. It is unlikely that an organization would add vendors to the file for control purposes unless they exert significant level of business. That's all. Thank you. The next reporter will be Aryu Salamo po.